Hello everyone. It's me, NYC Einstein from the Florida New York Stock Exchange on July 10th. I'm exhausted. This market is back to green, back to strong. Back to 25,000 virtually, and if you go back and run the videotape, I know you guys missed a couple of days, you will see that from 24.2 on the Dow and 2,700 on the S&P, I said that was foundation, that was support, and that you would finally find a rally back into this market on it, and we've gone that way straight over the last 4 days. Highest close in the S&P since February 1, record close in the Russell, a little bit of profit taking right off the highs here, down 9, S&P up 9, kind of profit taking because the Russell's been trading in record territory every day for the last week and a half, or for the last month and a half. Any way you want to look at it. Sort of strange divergence. Oil did turn around during the day and rallied up 50 cents. Got up to 75, trading around 74.5. Transports are off a little bit relative to the trade in oil, I would presume. I did not give you a real breakdown of what the market did overall, individual stocks, but it's a strong market. The Dow is up 150 points. We closed right off the highs. The S&P, the highest close since February 1. Market's on fire. The market's on fire. Oil, super strong, taking the market with us. Dow, super strong. Now look, why are we up? Is it that there's lack of bad news? I mean, there's potentially plenty of bad news, whether it's tariffs or trade wars, or what's really going to be the outcome of that and the results. And I'm not sure everyone knows. Or they know and they're not telling us. They'd love to spin a negative narrative on this, but it doesn't seem like those in the know, those who are spending money in this market, are feeling that there's any negative potential. Maybe we're going to get hit by a wild smack in the side of the head by a 2x4, but for now the market is not engaging it in a negative fashion. So maybe it'll have no effect, or we just don't know the effect as yet. Earnings season starting on Friday, coming in, banks first. Robust loan growth is anticipated. They've lowered the bar a bit on expectations. Hopefully banks will be solid. Reasonable interest rates are going to basically keep banks solid on as far as earnings go. Money being put to work here. Tucky, I love you. Money being put to work in July. Sure does look this way. Forget about sell in May, go away. Forget about North Korea. Forget about Saudi Arabia and oil. Good night, Thomas. Forget about OPEC announcements. Forget about Iran. Forget about G7, G8, G9. Okay? Forget about slightly raising interest rates. Forget about trade wars, tariffs. All these things that could definitely put headwinds into this market that we sort of started to feel at the end of the last quarter are absolutely being disengaged by this market. There's money being flooded into this market in a big way. Stocks are trading at outrageous multiples. Tech sector on fire. Today kind of flat, but basically on fire. Apple near 200, Facebook near 200. I mean, these things are on fire. So I don't need to overanalyze. I don't need to tell you anything that whatever negative spin that could be in this market is not being engaged. Fresh money, good money, smart money is going into this market. Whatever sell sides we've seen have been emotional selling, headline driven, smart money buying. I'm going to leave it at that. Inside Verstop, NYC Einstein. I'll see you tomorrow.